This is Damon Stevens with FinWealth Builders. Today is Sunday, July 31st, 2022, and this is stock market prep for Monday. Also a little bit of review on the close of last week as we get into prepping this new week coming up here. So let's get right into it. Take a look at what's going on and what we need to do to be ready. So if you're not subscribed, definitely subscribe to FinWealth Live on our YouTube channel and continue to like these videos if they are helpful for you. And also, leave comments. Let us know what else we can do to improve and bring more content to you. If you have not already, definitely go to finwealthlive.com. You can subscribe there to our Discord. It's free Discord. We post numbers before the market opens on what we're trading. When we're getting in, when we're getting out, before the market even opens, and that way we have everybody prepared before the markets open, and that way you don't feel like you're waiting on us to provide information. But again, these are our trades, so this is not financial advice, so definitely trade your own trades, but just sharing with you what we're doing. So definitely check us out, finwealthlive.com. There's also some free training out there that you hopefully will find helpful as well. Looking at the market on Friday, though, you can see the Dow Jones closed up 0.97%, NASDAQ up 1.88%, and S&P 500 up 1.42%. Just this nice gradual grind up to the top here. So definitely see the money flowing into most of the industries. Tech is obviously real strong. Apple, Amazon, Tesla, after their earnings, they just continue to rocket. Energy's come back as well. And financials, and really you need the financials to kind of help drive the market up as well, but definitely some strength there in the tech area. Also, BCAC did hit our scanner, and we did not trade this one, even though it hit 125%. And the reason is the volume was very low, like almost nothing. So this is very dangerous. So we definitely don't trade anything unless it gets, ideally it's great if it's over 10 million shares, but we like to see these the higher, a higher percentage of change, over 100%, and also higher volume. So we did not trade any of those small caps. Again, the futures live right now over the weekend here. You can see that we did kind of pop up here right to, this upper deviation band. You can see we had rejection twice here, this double top before it pulled back down. And you see that we're right there kind of at the edge. So it kind of pulled up almost to that line and then it's pulled back a little bit. So, what do we see on Monday? Well, I see possibly a pullback to maybe our support line, which is around this 4082 or 40, maybe 4081 area. If it pulls back further, we get a deep pullback. Obviously, then this 4020 would be our next line in the sand that could pull back. We expect some type of pullback and a bounce and retry before we'd have a failure. It could always just fail, especially if there's any bad news that comes out on Monday. We don't have any control over that either, obviously. But just look, as long as the news is good, the VIX is down, futures remains high. Should be, if we do have a little bit of pullback, we should have a pullback, at least a retry back up here at the same levels. 417 to 419 area, and then then we possibly could pull back, because you see here we just kind of chopped for a while before pulling back. So it's possible that we could get in this consolidation area again and just kind of sit in there and chop. And obviously we're in that zone right now. We've been here for a few days, so there's definitely something to look for. Looking at the calendar here, you can see coming in, we have manufacturing PMI. That could affect the market. This week we have so much news coming out lately. It just really, you see the market's really reacting to a lot of that. We have household debt. We have PMI final on Wednesday. And service index information, jobless claims, trade deficit as well, and non-farm payrolls, unemployment, all on Friday. So really busy week as far as news too. I just, just be really careful in this market. Make sure you're locking profits in along the way. Because it's easy for things to turn back around. But for right now, the bulls have been playing. As we get into the chart, you'll see that we're getting closer to some resistance areas, though. So just something to be cautious of until we break out above those lines or pull back. Looking at S&P 500, this is calls and puts. This is people shorting the market with contracts. We're long on the market contracts. And it was funny on Friday, we had this big squeeze. So all these cleared out. There's hardly any calls, gone. Everything was short in the market, and then all of a sudden you see the market just kind of just climbed higher and higher and higher, and it probably was all these people covering their puts, right? Everybody shorted the market for the week, didn't go long on the market, and the market started tanking, and they're going to lose all this money. The market's going to take all that money. So obviously they'd have to buy and ride that market up to cover their losses. But as we're going into this next week, and see still that the heavy side really is on people expecting the market to go down. And you look at the put ratio, there's 3.2 people buying short contracts to short the market than there are people going long. So we do have this spike, this 410 area. So people, if we get over 410, you might see what happened last week. Last week, we had a ton of spikes up here in calls. And when the market just took off and ran, all of a sudden these calls disappeared, which meant they're probably cashing all this out. This all cash out. So we're at 408 and these are 410. So the question would be, if we get above 410, do you see a big old huge cash out happen and the market pull back and then maybe cash out these people as well? Or do you see a squeeze happen to where these guys, keep them in and we keep pushing up to this next level, which is towards 420? Now, obviously, if it doesn't get to 420, these guys might be losing their money. So just something to be aware of, right? As you're going long on the market, that, it's hard to say if we get a pullback here, but, people thought we were going to pull back here, obviously, and lost a lot of money and had to cover their shorts, which causes a squeeze because they're having to buy to cover everything that's outstanding. So something just to be aware of. Max pain obviously would be 395 down here in this zone between the two. But if we don't get down to 395, market keeps going up. It's going to create this squeeze here. People are going to have to cover these puts again this week. And so, maybe that pushes the market up at some point. Market's going to have to pull back here and do a little bit of retesting. Looking at the earnings, a lot, pretty heavy, amount of companies reporting this week, but nothing like last week. Last week is like that's the big week of every earnings, quarter, every time. Just really huge volatility. There are some things we'll be watching, really trying to get a feel of the market, how it's going to continue going forward here on some of these other areas, on consumer products, travel, things like that. So, on Monday, looking at on semi, before the open, after close, we have Pinterest, Mosaic, Activision, Avis, and then Tuesday, Uber, Caterpillar is definitely a big one. AMD we're looking at. So there's several on Tuesday. Tuesday will be a busy week, for the open and the close. Wednesday we have a few that we're looking at as well, and Thursday will be a nice busy week, and then Friday, Western Digital is probably the biggest one there for us. So that's kind of our shopping list outside our normal list that we have. So just something to be aware of. Looking at Tesla, one day, boy, rocket right on Friday. That just kept going and going and going. When it broke through the levels that, that could be resistance, if just like filled through the gaps, filled over the 200, it's over the 200, just kept on climbing. I thought maybe it was going to, break out, to the 900s levels. It was pretty close. But yeah, so last week, breaking out from 800 cleared to, almost 900. That's a pretty huge run for Tesla without a pullback here on this last Friday. So, you see here, we pulled up, we have this big long bar here, pulling up into towards 800, over 800. You see, we kind of pulled back for 3 days, and then we had this run up. So that's why I'm saying just be cautious a little bit, because, this had this big candle about the same size, same run before a pullback. And we're kind of right into the middle of this big this breakdown candle right here. So, we could chase all the way up here. I think we could very easily get to 942, 953 is kind of what I have in line sandwiches, these two candles right here. Definitely think we can get up there. That should be resistance if we get that high before we pull back. Or if we do pull back, hopefully get support off this 200 and just allow us to run back up here. If we don't, look for some support back here around that 773 area. Microsoft, again, it's just running like crazy. It's just over the 200 now. Ran through the 50. Last week, we ran through the 50, the 100, and the 200 in 1 week. Just amazing. But we have resistance coming up here at 280, which is the top of our deviation bands. Also, it's where our trend line comes down. So just look for possible resistance area right there, a little bit of pullback. Amazon, right between the 200 and the 100 moving average. It's kind of sandwiched right in there. Pretty well, we had a really good week on on Amazon as well. So we'll see if we can break out of here. We have to, if we're sandwiched in here, we got to get really above the 200 to run here and break out even further. If not, possibly come back and retest this 100 or even down to this 50, because that's kind of where you see this little group here. We should be come back and retest in that area. And that's where we have these trend lines in here. So Apple, big run from Apple too, run up towards our resistance area, just chased almost this entire candle. Just amazing what the market's doing. But you have this huge gap down here that's going to get filled at some point. So there will be some type of pullback to fill that. But yeah, you just see Apple had a nice run, but we should have resistance up there around that 160, 166, 167 level. Chipotle after earnings just killed it, just a rocket ride, 1,300, almost up to 1,600 in 1 week. So crazy moves, just some really crazy moves. And you see where it's going, right? So you can see this is where we had a big old breakdown candle. We're just right into that candle now. So we should have some resistance around 1621, 1623 area. We could get as high as the 1637. We have a green line up there. But we should have some type of pullback and retry, even if we pull back a little bit and retest. But you see here kind of where last week, where it ran up. We pulled back and then ran off this support line that we had here. So, and you're seeing that common here with Apple, came up over our support line, came back, retested, and then bounced off. So just something to, a little bit of training there. Just look for those pullback and bounces, and it gives you a good opportunity to launch off of there. NVIDIA, we've been trading this one and tracking it, but just kind of paying attention to this one here. You can see we had resistance here at our resistance line, tested it again, broke through, closed above it just barely. So if we pull back on Monday, we could pull back possibly down to this 50, because we got really almost like another channel. And I didn't mark it out here, but it's really almost another channel that we have possibly forming right there. You can see kind of this grouping here. So it's possible we could just start to bounce through this range here. Again, definitely subscribe. Just another reminder, definitely like this channel, and we'll continue bringing this content to you and make sure that you're prepped. So here, this is S&P 500. So we're going to jump over now to some core stocks and some indexes here. So S&P 500. So this is the number of stocks in the S&P 500 that's over 200-day moving average. So if you're over the 200-day moving average, that's good bullish momentum. And you see we're sitting here about 35. And really the low in the market for the 500 was back in June 17th. That's kind of low. We came up, bounced back off this line here. And that was back in July 14th was the, a higher low. So far, this is the lowest low in here, but we're in a wedge here. Looks like we may break out here, but we could also find resistance. You can see every time we got up to our trend line and above the 100-day, we rejected. And 100-day and rejected. 50-day, rejected. 20-day, rejected. So you see it just kind of staggered down. Now we got it, broke above all those, and we're above the 100 finally, and we held that for 1 day. I like to see at least a couple days. You can see this was 2 days before the failure. So we'll see if we can get towards that 200, but we are extended, but we could obviously break out of this and bounce off this particular area. But that's kind of where we're sitting with the overall market, just give you a feel. So about 35% of companies are over the 200-day moving average. Looking at the S&P 500 on a weekly chart, at the 50-day moving average, which is, above that's really usually pretty bullish. You can see 76% of the companies are over now at the 50-day moving average, which means there's a lot more bullish going on right now in the market than bearish, even though we were kind of in a bear market. But a lot of these companies, if they're breaking over the 50-day and they hold, that's more upside than it is downside. Now, the only thing I'll say about that, though, is you can see the S&P 500, all these companies have been in a downtrend, continue putting in lower highs. This is the first time we kind of came up here, but look at, we've tagged the same area that was back in November 2021 and January 2022 and March. So here it was rejected, here it was rejected, here it was rejected, and we're right back there again. So I'm saying be cautious, because we're right at the same area we rejected again. So this is fourth time in that same area. So it'd be easy for this to pull back here as it did before. And you can see it continued to put lower lows in, even though it put that the same high in. So just be careful out there, because we could see a pullback here and rejection off this level, off these companies in the S&P 500, or we could break out as we did here. But you can see each of these were short-lived. So that's why I think there's a pullback in the future. No, I don't know for sure, but it looks like from the chart and from the patterns and from history, it looks like it's very likely. Looking at the 10-year bonds, so when this is down, the market rallies because money's moving out of the bonds and into the market. And you can see that's what's happened the last few days here. So we pull down here below, so we got a lower low in. So that's good. That's nice and bullish for the market. Kind of bad for if you're in bonds. And 2-year bonds, so coming down a little bit further. You can see here again, this lower high is put in here. Don't have a lower low yet, so still have a higher low, but this has continues to work down. So as long as this is not broken, if this is broken to this 2.72 area and come down here, then we'll have a lower low, which is very bearish for the stock market. So watching this one, but definitely seeing some weakness in that area, which is helping the market rally. Dollar too, with the dollar coming down, more money's flowing in the market, less money's flowing onto the sidelines. But you see here, we're right on our trend line. We've been there 2 days now. Last time we came down the trend line, we kind of sat there for a week and then started running back up again. And then we pulled back to the 20 and then ran from there. So we're right there. So do we stay here, the same thing, a couple days and start to run back up? If we do, market's ready for a pullback. So just be careful. Gold, nice run up here to our trend line. You can see here again, we're downward sloping, but trying to come up here and break out and put in a lower, higher low. So we'll see if we can do it. Maybe this is the bottom. Hard to say though. We're not broken through here. We got really get above all the moving averages if we want to show if gold can continue to run. The oil had that pullback, running back up here. It's above the 20 and above the 50 and the 100. So and basically everything right now. So we'll see if we can break out above this 82 area. If we can get above 82, we can continue to rally here. If we get a pullback here, then that's definitely a sign of weakness, and we could be channel bound. And you see here how we got channel bound. We did go higher lows and higher highs, but we were channel bound. So just something to be aware of. The VIX on a daily basis, you can see here's a downward sloping. So we continue to go down towards 20 or below 20. That allows the market to rocket. If we bust out of this and head north, then we've got to pull back on our hands. So that is kind of where we're at. Hopefully that helps you kind of see kind of overall where the market's going. So let's now go into the SPY. So here's S&P 500. You can see here, this little grouping here, consolidation, little consolidation. We're right in that box of consolidation. We're kind of towards the bottom. Up here would be resistance around that 417.55. If we do, we could consolidate here for a few days. So you can see here, we pulled down, came up, consolidated, pulled down. Now we're back up into that channel. So we very well could be in the consolidation zone here and kind of in this range bound here between 407 and 417 or 418. So just something to be aware of here that we could get stuck there again. Looking on a weekly basis, you can see we're above the 20-day, the 100-day, the 200. We're right below the top of this breakdown candle. Obviously, that would be the next goal for it, to get above there and break out to new highs and set new levels. But right now, we're just kind of sitting, pretty much even. Triple Qs broke up, closed right here above this resistance area that we had before, right into these candles. So we'll see if we can climb these candles. That'll be our next resistance area up here towards 329, if we can do it. Looking at semiconductors, one day you can see here, kind of right at the top of this candle, we closed these gaps up here this last week. Could become range bound here. You can see semiconductors were range bound quite a bit here before breaking down. And now that we're back in that range, we could very well become range bound again like we were for a few weeks before. Again, IWM, so this is kind of range bound here. coming up towards the top of that, we'd have to obviously break out above, 189 to kind of continue rallying. Otherwise, we might just, continue to come up here and then bounce off this and head back lower. As far as the financials index, so you can see here, looks like a little double bottom here. There's kind of the neckline that kind of puts us up here, kind of where we're headed. This 32.27 should be an area of resistance. They're pretty close to it. That's kind of the top of this big breakdown candle here. We very well could come up to this 35.56 if we really want to run the whole thing. Just be cautious as we do for a possible pullback here. But right now, financials index is looking good. Looking at XLV, so healthcare, we're kind of right up here at this resistance area once, twice, and 3 times. And this is kind of creating a little bullish flag here with these lines here. So it's looking to try to break out because it didn't reject right off that first candle. It's got 2 candles now. So if we can break out above this area here, this 132 area, we can start to rally back up here, maybe towards this 140 area. Look at energy sector. Energy sector's done well. Just continues to climb up here and grind up. But really big day on Friday. So resistance here is really about this 77.49. This candle right here. That's what we're trying to chase back up. So we'll see if we can complete that chase up there and break out, or if we just pull back after that big run. So just be aware of that. Bitcoin being in this channel up towards the upper side of that channel. You can see here's a bull flag trying to break out. We need to get above this 25,000. If we get 25,000, then we can start to work our way up towards 32,000 and up. So it's trying. It's on the upper side of that channel. Ethereum, same thing. A nice strong bull flag here. So we'll see if it gets enough energy to break out. But right now it's at the top of our deviation bands, and but it is creating a bullish flag there. That's our stocks, our cryptos, things that we're working on, things that we're doing. So we want you to know what you need to do to be successful in the market. We offer training. We offer live trading with us. So just sign up and let's get started. See if we can make some money this week. The volatility in the market is great for day traders and scalpers. Long-term trading, just watch where those bottoms are. We've obviously it looks like we put at least a temporary bottom in. It's obvious we could come back and revisit that, but at least hopefully these charts are showing you kind of where we're at and hopefully where we're going. So everybody have a great night. We'll talk Monday night. See how your trades went for the day. Plan out our next day and make sure that we kind of are all on the same page here. So everybody have a great rest of the weekend, and we will talk to you tomorrow night.